Leisman and the Fed's decision and call on rates. Steve.
The Federal Reserve maintaining the funds rate in the range of 4.25% to 4.5%. They did say that inflation remains elevated as it had last time, but they crossed out a line this time saying that inflation has made progress towards the 2% objective. Not 100% sure what that means. Perhaps we'll ask Powell about that. Is that hawkish or just getting rid of a tired old phrase? They say labor market conditions remain solid. They had said that they had eased, so they did an upgrade of the condition of the labor market, also noting that the unemployment rate has stabilized at a low level. The economy, as they said last time, is expanding at a solid pace. The committee is watching risk on both sides of its dual mandate. The statement says the committee is still considering the extent and timing of additional adjustments. No hint as to when that might happen or by how much, and no change to the balance sheet reduction plan. They'll keep reducing the balance sheet as they have been. As the statement has said in the past, it says they're prepared to adjust policy as appropriate if risks emerge. And we have a unanimous decision with new voters for the new year. January 2025 is when they turn over. We have Schmidt from Kansas City, Collins from Boston, Musalem from Kansas City, and Goolsbee from Chicago. So a bit of a Midwest contingent voting this time, sans Minneapolis. So back to you guys. Very much a staged statement, not much going on. And I don't know, Brian, can I use the phrase I reserve the balance of my time and send it over to you?
Well, wait a minute, Steve. You can't just drop it like it's hot, because I'm just going to tell you, Steve, what you just said. I'm going to quote Steve Leisman and Steve Leisman. Labor markets are solid. Inflation may get better. Considering additional timing of moves. This sounds like a Steve Leisman quoting a Fed ahead of a rate hike, not a rate cut.
You know, I guess so. I mean, I don't think that they're there at that point yet, Brian. I think the idea that the labor market remains solid is a positive that Powell and the Fed have that allow them to figure out which way they want to go with rates. But I still think there's an inference in the statement when they say, in considering the extent and timing of additional adjustments. And by the way, Brian, you do add the important point here, which is that one of the keys that I've been saying to this meeting is, does Powell affirm that with all the other things that are going on that y'all were talking about in the last segment, tariffs and tax policy and all the other stuff, will he affirm that the direction of travel is still downward? That's really important. Is he still confident that inflation is moving towards the 2% target? Those are the two monetary policy keys as I see them to the press conference that's coming up.
Quickly, Steve, usually the big mover when we get the statement is also the projections, the dots as I won't call them. But we did not get those this meeting, right? Which makes this a little bit, less for the market to kind of sink its teeth into.
Right, no dots. The dots come four times a year. I have no problem saying dots if they want to fire me for saying dots. By the way, this is a little inside baseball where we had an old boss who didn't like us to say the word dots. I don't actually know what the new policy is, but in any event, they come four times a year. There is one question, Kelly, we might ask the chair, which is he did answer it one time, and we said, hey, if you were to do the dots now, are the old dots still good? That might be an interesting question, though. I don't know that enough has changed now to ask him that question in terms of, you would say, well, I think the two cuts are still something that the Fed would more or less back. Remember, it was a close call last time.